Join us now for In the Driver's Seat with Jeff Potter, Finance Manager from Elhart Automotive Campus in Holland. Jeff and his guests will give you an insider's view of buying, leasing, and servicing your vehicle. And now, Elhart Automotive Group puts you in the driver's seat on 1450 WHTC and WHTC.com.
Good Saturday, everyone. You're on In the Driver's Seat on 1450 WHTC, Holland's hometown station. I am Jeff Potter, Finance Director at the Elhart Automotive Campus. Thanks so much for tuning in. Well, it's a new week and a new segment and all that kind of fun stuff. What we're going to be talking about this week, we got a lot of great topics, but we're going to talk a little bit about interest rates on car loans. We're also going to talk about leasing versus buying, and then we, of course, have our 2 cents on service. This week we have Ron Savage doing the 2 cents on service, and Robert Gibson from the Elhart Automotive Campus, new car manager and pretty much leasing expert, if you will. So let's start off with rates on car loans. One thing that people always ask me, Jeff, what makes up the interest rates? Or I should say, more to the point, how are interest rates determined for car loans? And that is a great question, because there can be some fluctuation. So let's just go through what the basic parameters are. The first parameter would be credit or credit score. So again, the better your credit is, the more aggressive the interest rate will be. The other components are collateral, and by that would be the age and the mileage of the vehicle. Then, of course, you have the term of the loan. And then the last thing you have is what's called loan to value, which is how much you're borrowing versus the value of the vehicle. All those things make up your interest rate. So again, every single bank has a different rates and so on and so forth. And what we do when you come to Elhart, if you choose to finance with us, which we hope you do, is basically we go out and we look and try to find you the most aggressive interest rate from all of our different lending sources. But again, each lending source uses that basic formula. So it's kind of interesting because a lot of times you'll see 0% for 36 months and all these teaser rates and stuff like that, and they're all really good. But, you know, again, just so you know, it's all based on, again, term, the collateral, the mileage on the collateral, and, of course, your own personal credit. So hope that helps. And, again, I think it's valuable information. So I think that really the more you can understand about the process, the better equipped you'll be when buying a car. And that's really the reason for the show. By the way, speaking of the show, if you have questions, please email me at jeffp@elhart.com. That's jeffp@elhart.com. Otherwise, you can also visit WHTC's website, and they have a spot there where you can send in questions. And also, podcasts. That's correct. At the end of each show, we're going to have the podcast available for this show. It'll be available on WHTC.com and also on www.elhart.com. So when we come back from the break, we'll be on with Robert Gibson. You're listening to 1450 WHTC, Holland's hometown station, in the driver's seat with Jeff Potter from the Elhart Automotive Campus. Well, folks, it's time for the main topic of the week here on In the Driver's Seat. This topic, by far, when I'm out in public, this is something that people ask me about all the time, so I'm really excited to bring it onto the air. We're going to talk about leasing versus buying. The skinny, the nitty-gritty from the Tulip City. It's going to be the real scoop on whether you should lease or whether you should buy. Now, I have on the phone with me Mr. Robert Gibson, new car manager from the Elhart Automotive Group. How you doing, Robert?
I am just fantastic. How are you, Mr. Potter, today?
I am having a wonderful day. It's Saturday in the Tulip City, and I'm on WHTC. I don't know how it could be any better than that. Okay, Robert, here's the deal. Most people really don't know the difference between buying and leasing. And so I just thought what we'd do is we would talk. We're not going to be brand specific, guys. As you know, on this program, we don't talk and push Elhart, you know, even though by far I think Elhart Automotive Campus is the only place to buy a vehicle at 870 Chicago Drive in Holland, Michigan. We're not going to be brand specific. So, Robert, First question, if you would, because really you are the expert when it comes to that. Everybody knows what a conventional loan is on a car. You know, you buy it, you have the term, you pay your payments, you pay it off, you own the car, happy, happy, joy, joy. Now, what is, from a high-level view, what is a lease?
Well, that is a great question, Jeff, and I'll do my best as, and all you out there in radio land, don't listen to a word he says about me being an expert, but I'll do my best. No, I'm very familiar with leasing. My wife and I lease. We leased vehicles for years and years and years for a number of different reasons, and I'll try and highlight those and not take up too much of your time. But essentially, guys, whoever's listening, your lease is a great way to drive a little more car for a little less money. And there's a few good reasons why. First of all, the bank really takes all the risk. Some people, the common misconception is leasing is like renting a car. If you've ever rented a car, they're typically $25 to $40 a day. Multiply that by 30 days in a month, and you can quickly realize that leasing isn't even close to renting because it's about a third to a quarter of the price. The bank takes the risk. They're assuming the liability, and what they're saying is, hey, you're going to lease this car for 3 years. You're going to drive it for 36,000 miles, and we're going to estimate that when we get the car back in a reasonable condition, that we're going to be able to turn it around and sell it, or it'll be worth X amount of money. They have a few factors involved in making this computation, and essentially what they do is they design a payment revolved around the end value of the car. So what you're doing is you're getting, again, a little more car for a little less money, if that makes sense.
No, that absolutely does make sense. Now, from a customer standpoint, I like more car for the money. Now, but what are some of the other benefits to leasing?
Well, there's a lot of benefits. The ones that pop right to my head, and a couple of reasons why I lease. First of all, I like having a new vehicle, and I love being under warranty. Essentially, I fix my cost to drive a car. I know what my monthly payment is. I know that I'm going to have no surprises like a broken this or that or a failing this, because my car is completely under warranty aside from normal wear and tear like anything else. So I love that peace of mind as I drive down the road. We are getting newer products faster than ever from all the manufacturers these days, and quite frankly, I like to be able to go out and purchase those if I'd like. I guess I should say lease. So it gives you the opportunity, because you're in a shorter-term contract, to get out there and stay in a fresh product, which I really love to do. I'm a car guy. I love new cars. If I'm in a 6-year loan, I'm strapped, and I have less of an opportunity to do that. Another great reason for leasing, I think, is most companies that at least we work with at Elhart, I can't speak for other brands, include gap insurance. And if you folks know what gap is, it basically is there to protect you and cover you if you have a total loss on the vehicle. So those are three that just pop to mind. There's certainly other advantages too, but those are three that come to my mind as I look to lease a new vehicle.
Well, I'll tell you something. You know, my wife Phyllis and I, we lease all of our vehicles as well, and yeah, really for the same reason. I like to drive new cars, and plus I have a fear of tools, so I can't fix anything.
That's right.
So
we're in the same boat there.
It's nice just to drop it off to one of the guys and say, please fix this if it needs to be fixed, and
Sure.
I don't want to have a bill. So that's good stuff. Now, we actually have, and this is very exciting, we have our first email question from a listener. Thank you so much, Chad from Zealand. Chad wrote in, as just one of his general questions about leasing, which kind of worked really, really well. He said, Jeff, I drive a lot of miles per year. I don't know what the definition of a lot of miles is,
Sure.
but I drive a lot of miles per year. I've always been told that I can't lease. Is that true?
Oh, that is so untrue. And unfortunately, whoever might be coaching Jeff is really not doing a good job if that's the information he's getting. Lease is a great option for folks who drive a lot of miles, and I'll give you a few reasons why. First of all, again, because a lease is designed to factor in the end value of the car, you can buy miles on a lease. You can set up a lease for any mileage that you want. If you think you drive and you have it programmed pretty good, 17,000 miles a year, you can get a 17,000 mile a year lease, and so on. It's designed for that. A lot of people think, well, I'm going to have a higher payment on a lease if I drive a lot of miles, and that's absolutely true. The bank has to protect themselves because the car they're getting back is going to have more miles on it. But switch gears and look at financing that car. If you finance that car for 5 or 6 years, which the average, Jeff, you probably say better than I, but I think the average loan term nowadays is somewhere around 66 months. We're approaching 6 years. you guys, you're going to be driving so many miles. Picture when you get to 5 years, if you're a 15 to 20,000 mile a year driver, you still have a loan on that car, and it's got well over 100,000 miles on it. What position might you be in that car where you still owe money, yet it's got so many miles, the value is just decreased and almost non-existent? Whereas a lease, you're protected. You are paying every month to use those miles and really use that car up, for lack of a better term. And when you're done, you can throw the keys on the desk and jump into a new lease. You can buy the car out, or you can just walk away free and clear. So great option for high-mileage drivers. That is definitely a common misconception that we want to coach people. That is incorrect.
Absolutely. The funny thing that I don't think a lot of people realize, and that one thing I discovered over the last year is a lot of your companies, like your companies that have over-the-road reps, like pharmaceutical companies, and companies that typically have vehicles for their salespeople, they all lease now.
Correct.
Again, and it just, removes the liability from the company and shifts it to the bank, and like I said, it's a great option. All right, Robert, great. Well, another question that I get a lot in the finance office when people are leasing for the first time, they're generally really nervous about, because they have to turn the vehicle back in, the condition of the vehicle. Actually, it's funny. Chris, the board operator, and I were talking before the show, and he was kind of talking to me a little bit about it. And go ahead, Chris, you were talking about like the wear and tear. And
absolutely. When when you are buying a car that it's going to be yours,
right.
And whatever you do with wear and tear, you're responsible for it, and you don't really worry about it. It's wear and tear is going to happen when you own a car. I had a friend in high school whose father leased for him, and that's one thing we always worried about is not only the mileage, but do we have to be very cautious about putting wear and tear on the vehicle? Is that a misconception?
No, actually, it's a great question, and certainly there are parameters out there for the condition that the bank expects the car back in, and most of them do allow for what they call normal wear and tear. They understand you're going to get that door ding in the parking lot at the grocery store, and you're going to get some little scratches and probably some stone chips and things that just happen naturally from driving a car around. So there is an allowance for that. Every bank is different. I know some of them have actually what they call like a wear item square, where you can actually hold it up to the car and visibly check if the ding or scratch or whatever whatever wear might be on the car is allowable before you turn it in, so if you have to have anything corrected. To me, I try to look at the positive of anything. It's really incentive to take better care of your car. Again, with them assuming the liability, of course, they want the car back in reasonable condition. But once again, you got a little scratch or a little ding here and there. No, you're not going to be charged hundreds and hundreds of dollars. Some banks will charge a security deposit up front to account for that, just like if you're leasing an apartment, they want their first month's payment, security deposit up front, and you give it back in great condition, you get that money back. Some of them have a fee at the end. Everyone's different.
All right. Well, Robert, I'll tell you one other thing that I would just kind of share with people. I know, and I can speak for Nissan. Nissan, at least right now, they're actually forgiving up to $500 worth of damage and wear and tear on their leases. So, again, you can feel okay to take the vehicle to Myers or Family Fare. By the way, Chris, remind me to bill them for the free advertising.
Absolutely.
We just did. And not have to worry about the door ding or anything like that. So, again, it's all good stuff. Guys, it's about time for a break. You're listening to In the Driver's Seat on AM 1450 WHTC, Holland's hometown station. AM 1450 WHTC, Holland's hometown station. You're on In the Driver's Seat with Jeff Potter from the Elhart Automotive Campus. Our guest this week, Robert Gibson, car enthusiast, new car manager, leasing expert on. Hey, Robert.
Hey, guys. How we doing?
Good. Thanks for coming back and staying on the phone with us. We know that you're really busy on this Saturday. So, Robert, again, we'll just leasing, great option. You do it. Is there any situation, just kind of the last question, is there any situation where you could see where it doesn't make sense to lease a car?
The one situation is just if you're the kind of person that likes to keep your car for a long time, and you know you're going to keep it, you know you're going to make all the payments, you maybe are going to hand it down to a family member, sure, lease makes no sense there. Mm-hmm. Otherwise, you can make an argument that you should either at least entertain a lease. If you're out to purchase a vehicle, have the folks at the dealership run a lease for you. It's free to look at, and then make an informed decision on whether or not it makes sense for you and your families.
Okay, and generally, just to put you on the spot here.
Sure.
Generally, what is the payment difference for a lease versus a buy? Just talk about, like, we'll just do the 60-month buy versus a 3-year lease. And again, we're not going to hold you to it. It's just a ballpark.
Well, you know as well as I do, the payments fluctuate so much in regards to term and mileage. But why don't I just give you an example instead? I just ran a lease, and I know we're not supposed to name drop any manufacturers, so I'll just say that it was for a beautiful new Hyundai.
All right, perfect.
The lease came out at 3 years to be within $1 of the 6-year finance option. So for this customer, you're looking at driving a new car for 3 years or having the same payment to buy it and finance it for 6. And I just looked at him and said, you can make an informed decision now whether or not you'd like to keep that car for long term or have the option of getting one of our new great cars come 3 years from now. So.
Awesome. Well, Robert, again, thank you so much for your time. I appreciate it. Guys, that was Robert Gibson, new car manager from the Elhart Automotive Campus. Robert, have a great Saturday.
Thanks for having me, Jeff. You too.
You're back within the driver's seat with Jeff Potter at the Elhart Automotive Campus on AM 1450 WHTC. Well, guys, it's time in the program for the 2 cents on service. This week, we have Ron, the Macho Man Savage, service director at the Elhart Automotive Campus, and Ron will be giving us our 2 cents on service. Hey, Ron, what's the tip of the week?
Good morning, everyone. This is Ron Savage from Elhart Automotive Campus. Today's service topic of the week is wheel alignment. Wheel alignment is basically the adjustment of the angles of the wheel, which positions itself to the ground, parallel with each other. Maintaining the proper alignment of the wheels not only enhances the life of your tires, but also makes the drive as smooth as can be. There are 3 stages to a proper wheel alignment: caster, camber, and toe. Caster being the topmost tilting of the steering axis, which, though caster doesn't cause or influence the wear of tires, but it's responsible for the directional control of the steering wheel. Camber, on the other hand, is the outward or inward tilting of the tire, which, if you look at your tires, you sometimes will notice the outside edge is wore smooth. And then toe, which is from the front or rear of the wheels tilted inwards or outwards. These 3 combined together is like putting your foot firmly on the ground when one is off, or similar to stepping on a small stone where your foot's raised, which will cause uneven tire wear and uneven driving, as you notice going down the road where your wheel may be at 2 o'clock or 1 o'clock, 11 o'clock. Thanks for listening, everybody, and have a great day. Again, this is Ron Savage from Elhart Automotive.
All right, Ron, that was a great tip. Well, the second show is in the books. Thanks so much for listening. We really appreciate it. Please join us next week on Saturday from 11 to 11:30 here on 1450 WHTC, Holland's hometown station. I'm Jeff Potter from the Elhart Automotive Campus, and we're going to put you in the driver's seat.
Thanks for joining us this morning for In the Driver's Seat with Jeff Potter, Finance Manager from Elhart Automotive Campus in Holland. If you missed today's show or you'd like to hear it again, just go to our website for the podcast, WHTC.com, and join us next Saturday at 11 a.m. for In the Driver's Seat on 1450 WHTC, Holland's hometown station, and WHTC.com.